Ladies and gentlemen, it's me, James Sweeney, coming at you this Tuesday afternoon from the balcony overlooking the New York Stock Exchange trading floor. And I'm going to let you know right away, right off the bat, that this is not a closing bell happy hour report for two reasons. One, it's election day and stocks for the most part are holding steady until the results. And number two, it's election day and I can't drink. There is no happy hour because I have to work all night. You don't drink on the job. Rule number one. So with that, rather than talk about how the markets performed today, I instead will talk about the election and its possible effects on the U.S. and global stock markets. With that stated, check out the intro. I'll say it again. It's election day here in the United States, Tuesday, November 8th, 2016. And stocks, well, they're in full wait and see mode. Americans, as I'm speaking right now, hitting the voting booths. And so will I shortly after this report. This as the world waits to see who the American people choose to become the next president of the United States, Donald Trump or Hillary Clinton. Now, investors are extremely cautious ahead of today's vote, understandably so, and it is a tight race. And this just one day after the Dow Jones closed up 371 points and the broad stock market snapped its longest losing streak in 36 years. All this just yesterday. Why the rally yesterday? Well, FBI Director James Comey said the Federal Bureau of Investigation is not recommending criminal charges against Hillary Clinton over her emails. Now, it can be said that Wall Street expects a modest rally for stocks if Clinton wins, because, well, markets ran up sharply yesterday on bets that she would prevail. No criminal charges, she stands a better chance of winning. Also, if Clinton wins, stocks will not only rise, but the fear gauge will decline, and hospital, HMO, and other stocks related to Obamacare, they will likely get a boost. In contrast, if Donald Trump wins, stocks could suffer a decline and so-called safe havens, such as gold and the Japanese yen, should rally. Keyword should. Don't expect investors to flock to riskier assets if Trump wins. If he's declared the victor, there's a lot of uncertainties with Trump, especially when concerning foreign global policies. And rule number one for stocks, uncertainty, not positive for the markets. In other words, bring out the bears, at least in the near term. In addition to watching to see who wins, Wall Street also focused later on tonight on the post-election reaction of both the winner and the loser. Investors will gauge whether the winner moves to unite the country after a very divisive campaign and whether the loser accepts the defeat or opts to challenge the results, which could create even more uncertainty for a global market on edge. In other words, may the best man or women win this evening. Now it's time for me to run out there and do my American duty and vote. I hope you did too. From out on Wall Street, I'm James Sweeney.